Welcome to this tutorial brought to you by To The Tick, and today's topic is the bullish symmetrical triangle. Now, symmetrical triangles are one of the few price patterns in technical analysis that can be considered bullish, bearish, or neutral. Typically, triangles can be seen as trend continuation patterns, but they also can be setups for reversals. Today, we will focus on recognizing the symmetrical triangle, what does it look like, and then how to trade the trend continuation setup. Now, this image represents a symmetrical triangle attached to a pole. It is considered bullish or bearish, defined by the pole direction. The triangle itself would be considered neutral without that pole to highlight the trend direction. Today we will focus entirely on the bullish symmetrical triangle as a price pattern that potentially leads into a continuation of trend. So let's watch things bar by bar instead of looking at a nice image like that. And we're going to start with the bulls having established this nice big base of support. And yet so far they cannot get themselves through this line in the sand of resistance. And that is that first order of business is that the anticipation from the bulls has got to be to push that price through there. And if we push and hold, then we have a new breakout. It confirms, and you are watching the formation of the pole. Now, the higher, stronger, straighter the action, the better, both in price and in volume that creates your pole. You'll notice that it's got some tilt to it towards price, always will. We get our first bar or two that offers us a pullback, and then we get a swing up again, and that second effort fails to keep going with the advance, and we get our second pull down effort. So now we're going to use our swing high, which is also our pole tip, and we can draw a trend line connecting those two swing high efforts, and we can come back for our first pull down, point 1, point 2, and connect there. So now we've established our pattern. We'll put our image back up here, and we have completed our pole. We have the base, we have the pole, and we have the pole tip. So now let's focus on the triangle part 2. And part 2 in a trend continuation pattern is considered a consolidation phase. A phase for them to take a breather. They've expended a bunch of energy to get that push there in the background that created that new high in prices, and now we need to take a pause. Now, to be a pause during a symmetrical triangle, you'll notice the shape of your triangle. First of all, notice that the image that I brought over, it's not filling in the same way your trend lines are. Doesn't matter. It's about the structure. Is the structure holding true? So what is that structure? Well, we have highs, we have lower highs. We have a low for support, and we have higher levels of support. So again, we are converging trend lines, which means that each one of these lines is converging or inclining towards each other, and what it's doing is range bound your prices, and it gets tighter and tighter, and it's squeezing. Some people call this a coil, and it squeezes to what's called an apex. Now, to be a trend continuation pattern, we don't want them to stay in this triangle phase very long. We want them to get in here, consolidate prices, show us the range-bound action, and as aggressive traders looking for this trend to have established that the bulls are really in control, you can start taking your trades based off this lower support line. Stop placement will be whatever your risk level is underneath, and yet the whole concept here is once they're holding that higher lows, make them keep hanging on to that pattern. Now, expectation is we're going to keep running our head into that resistance line. To be a good trend continuation pattern from a symmetrical triangle, we want to only see them work 50 to 75% max of this structure before we get on with it. And we're looking for a new breakout on that upper resistance line. So first target, again, first order of business, they've got to push through that resistance. Same way they had to do it down here. We want to see a new surge in volume and a new surge in price. We're going to watch our pattern continue to unfold, and then we're actually going to get to set some targets based off the structure of the actual triangle. What about it? We can take our swing high, which is also our pole tip, swing high, and our first pullback creates the swing low. Now that is the widest part of your triangle, and you're going to take that measured move, we can actually measure it, swing high to swing low, measured move, and we're going to add it to the resistance line where we're hoping to get a new breakout. That is a more conservative target. The entire impulsive move that they gave you in the first place, you're looking for them to duplicate that move. And you want to add that measured move from your apex, which is the price point that actually is your squeeze. Now, we don't want them to have to wait to get here. We want them to get on with it, as I said before. So let's anticipate what we're looking for. We want to see volume stepping in. Again, a big surge in price accompanied with a big surge in volume. And that's what we're looking for. If we get it, again, we got to confirm that they're going to hold. One, stay above your orange resistance line that you've drawn there for your trend line. 2, wait for a bar to close above that resistance line. Or 3, wait for them to clear the resistance that established that number in the first place. One of those 3 options, trader's choice. And again, you'll see that you're gone from a point 1, which is the creation of your pole, part 2, which is your consolidation and your triangle, and then part 3 of this is now you've got a bullish continuation, beautiful looking pattern. Bullish symmetrical triangle, and again, the first thing we want to see and the most important characteristic is the pole. We need to see a thrust in volume and in price. Then we need to see the consolidation, often very little in the way of a pullback in price. It's a pause, it feels like a breather. Lower highs, higher lows, converging support and resistance lines. We're going to use the apex of that triangle and or the new breakout, and we're looking for a push in volume and price on those issues. And we're going to measure our targets, measure our move with the pole, add it to the apex, and or you're welcome to use the triangle swing high minus the swing low, add that to your breakout line as your second measured move. On the website, I will have the text as well as the chart samples and the videos to thetick.com/edu. Please come and subscribe, and I'll see you again soon. Bye for now.